is Chicago's very own WGN News.
Another Chicagoland-based company announcing some big changes. Walgreens going private. It's being purchased by a private equity firm in a $10 billion deal. Tom Gimbel joins us now to talk about what this means for workers. But first, of course, we've got to touch on the down day on Wall Street. Worst day of the year. Biggest single day decline since September of 2022. A lot of people panicking out there. I know you've got one side saying, sky is falling. You've got the other side saying, I'm ripping off the Band-Aid so that things will get better long term. What say you?
That's me is 2% down today, which in the whole scheme of things isn't crazy. But when you say it's the largest single day drop since 2022, it's a scary thing for many. But if one thing's history has taught us is don't look at your 401k today, Dean. That's what we need to not do. And there is a mentality of sometimes you have to take your medicine and it doesn't always taste good in the beginning, but the long-term effects. What the markets are telling us is we just don't understand what the tariff situation is. One day they're on, one day they're off. Is this good for corporate earnings? And we'll know that at the end of the quarter for how companies are forecasting out for the second quarter of the year. But right now, I think the message really is stay calm. Let's see how the week and the end of the quarter progresses.
Okay, so even with the president sort of hinting that we may actually be headed into a recession, you're saying don't worry.
We can worry all the time. We've been saying for a long time, people have been saying there's a recession coming. We need a recession because we need inflation to come down. Now we're actually maybe on the precipice of a recession with a little stock market fragility. And now people are saying, do we really want that? Are we scared? And I think that the market is really its own living, breathing organism. And we've got to let that dictate whether it's tariffs, whether it's high interest rates. It's always going to respond in its own unique way. And what we know is it's the most resilient form of capitalism the world's ever seen. And if we just stay strong, the American economy isn't collapsing and we still have eggs at $7 a dozen, et cetera, et cetera. So we've got other problems to worry about. I wouldn't lose sleep over a 2% dip today.
I love that message. The ship sort of always rights itself. So let's get to Walgreens, right? A staple here in Chicago and really across the country. So what does this mean going private now?
Well, I think there's a couple different things. Number one, the company isn't being bought by private equity because it's performing unbelievably well. That's, to me, the number one. If there's something to be concerned about for another Chicago great company, think about the icons we've lost over the last 10 or 15 years, whether it be Sears or Montgomery Ward's or Arthur Andersen in the early 2000s, and now Walgreens, which has been a staple here for so long. To me, that's the disappointing side. And we'll probably see the company reinventing itself under private equity. We'll see probably stores being shut down and some layoffs, because that's what happens when you have an underperforming company that is being taken off the public markets. Is the private equity sponsors have to figure out how to reshape this company to make it a more profitable, growth-oriented enterprise rather than one in decline that it's been for a few years now.
Walgreens is a huge employer here, though, be it on the retail side and even on the corporate side. What is that going to mean for all these people?
It's a really interesting situation when we see, and obviously not a Chicago company, but we saw last week that Starbucks downsized 1,500 people, and we've seen other companies throughout the country that have been doing the same thing. So whether it's private equity or not, I believe Walgreens was probably due to be right-sized to a certain extent. Now, what it does to the employees, it's not fun. And when you have people who are on the retail side, the good news is retail jobs continue to be in high demand. The bad part of it is Walgreens was a very good employer from a salary perspective, from a retirement benefits perspective. They were really strong and still are. Nothing's happened yet, but a really strong employer. And so those folks are going to need to reinvent themselves. And on the corporate side, the good news is Chicago continues to be a place where employers want to be here on the small to medium-sized business. And as I've said on the news with you guys every week, is that small and medium-sized businesses are really the growth engine for Chicago, and I think we'll continue to see that.
And very quickly, I'm just wondering about prices for consumers, because if Walgreens is out, someplace like CBS, I'm thinking prices going up.
Well, I mean, there is that possibility, but you got to remember what we have now. Obviously, Walmart shut down a few locations in some of the lesser good neighborhoods in the Chicagoland area, but you still have Walmart, you still have Target, you still have CVS. You've got a lot of pharmacy-oriented companies that have lots of outlets in the Chicagoland area, Osco, Jewel Osco, et cetera.
All right, so
I
there
don't
is
think
some
we're sitting-
competition.
There's competition.
Okay.
Any one company isn't going to derail the employment or the cost of goods in that sector. I wouldn't be worried about that.
All right, Tom Gimbel, thank you for your perspective tonight.
Absolutely. Enjoy the nice weather.